What's up everybody, Nate here, and the stock market this week is continuing its massive reset as all of the gains that it has seen over the last 2 years have now completely been wiped out. The Dow, S&P 500, and NASDAQ basically are at where they were before the pandemic even began, so we have completely erased just about everything. And investors are starting to wonder if we're going to see any relief in the stock market anytime soon. Well, today I want to talk about why we probably aren't going to see any relief anytime soon and why we are nowhere near the bottom right now. In addition, I want to talk about 3 major reasons why the stock market is tanking right now and why it will continue to do so pretty much all throughout 2022. So let's go ahead and jump into things. So the number one reason why the stock market is crashing right now is because investors are worried about the global economy and our world in general. There is a lot of things happening right now to the Russia-Ukraine conflict and in China that are causing a lot of backlashes in the stock market and ripples throughout markets all throughout the world. The first and foremost is Russia shutting down its pipeline to the rest of Europe. So now a lot of the gas that Europe was using, they won't be able to use that gas from that pipeline for the foreseeable future. Russia says that it only temporarily shut down this pipeline for routine maintenance, but Europe is very worried that because of all of the politics going on right now, that Russia may end up closing it down indefinitely. That could cause the entire gas market to explode, causing gas prices to go way up in 2022. So that is a severe problem, and it's going to affect us here at home because inflation is only going to rise. So that is the biggest and foremost. Now, the other things that we have to consider are from China. China obviously has a lot of pandemic-related lockdowns right now, and that's causing supply chain issues all throughout the world. Because a lot of the manufacturing gets done in China, well, we can't have products in the United States because China is not making a lot of those products, so we just can't get them here at home. But that is not the issue that is happening this week. This week, China essentially shut down protesters in its capital city and all throughout the country pretty much because people were going to banks and demanding that they get their savings back. China has a cash problem. It has an inflation problem just like the United States, and because people wanted to get their cash back, China didn't want a massive run on the banks. We've had that in the United States before, and it can cause a catastrophic failure of your economic system. So China did not want that. So people were protesting that they wanted their savings back. China essentially froze the savings and then now is disbanding the protests, something that is pretty much frowned upon from the rest of the democratic world. And those politics and those money problems are probably only going to get worse, and China is a growing economy with growing GDP, and if all of that starts to collapse, well, all of the current countries that have China's money in their banks, well, that money is going to continue to become devalued and they're going to sell it off, which is going to be bad for China's economy in general, and a lot of other countries rely on their economy to do very well. That could send rippling waves throughout other markets because China is an emerging market as well. Investors who are trying to hedge against problems in the United States are putting their money into Chinese markets, and they're not really having a lot of success because China is losing value in its currency and having a lot of other political problems. So that is causing really bad problems for investors here at home. And finally, just like Sri Lanka, Pakistan looks like it's going to be on the verge of bankruptcy sometime soon. It's about to default on all of its debt, making it the second major country to do so in recent years. Sri Lanka did this just a few weeks ago, and now it's having a really bad inflation problem and political problems and other issues with its economy that's caused protesters to basically storm the Capitol building and take all of those assets. There have now been major resignations of the cabinet members in Sri Lanka, so that entire economy is starting to fail, and a lot of people are worried that this domino effect is going to happen to a lot of other countries. We're going to start seeing more countries become politically charged and default on their debts, all because of this inflation problem, mostly caused by supply chain issues and the pandemic. So like I said, that affects the stock market in a lot of different ways because a lot of these businesses are overseas and we get a lot of products from them here at home. So if businesses are struggling overseas, we can't get the products that Americans need, so Americans buy less, or inflation goes up because companies have to price them at even more. So investors are doing a lot of moving their money around because they're afraid that a lot of things are going to change with inflation. And speaking of inflation, inflation, that is the second reason why investors are worried on the stock market right now, and the stock market is crashing because of it. This week, the Consumer Price Index for June 2022 is released, so that's going to take a basket of all of the goods and services in our economy and measure it. Are prices going up or are they going down in our economy? And most investors are really worried that inflation is still going up. In May 2022, inflation measured at around 8.6%, so it went slightly up from April, and that is a big issue considering what the Federal Reserve has done and all of its monetary policy changes. The current estimate is showing that inflation could jump up to around 8.8%, so it's slowly growing, but it's still going up in the United States, and that is at the same time that we could be facing a potential recession because Americans just don't have enough money to buy things. That, of course, is headline inflation, but the other number that the Federal Reserve actually likes to use is called core inflation. That excludes food and energy prices because they're very volatile, and the Federal Reserve doesn't really have a lot of control over them, so they don't like to look at headline inflation, which includes food and energy. Core inflation takes those two things out, but core inflation is still expected to rise in June 2022 up to around 0.5%, so it could be just over 6%. All of that shows that things are getting more expensive in our economy, and things across the world are getting a lot more difficult. If the United States dollar continues to lose value like this, well, other countries are going to dump the US dollar. They're not going to want it, similar to what's happening in China. That is a global crisis because now the United States dollar is no longer the reserve currency, and our entire economy could eventually collapse. But that is not even the number one issue that a lot of businesses and the stock market have with rising inflation. Right now, people cannot afford to buy things, and the only solution to that is, well, you need to give them more money, but you can't just give them more money and expect inflation to go down. Inflation is caused by the monetary supply of a country going way up, and it's done that over the last 2 years. The Federal Reserve has printed a ton of money. In fact, at the start of 2020, we had around $3 trillion in circulation, and today, by mid-2022, we have over 20 trillion. All of that money is just circulating around a lot. So with the Federal Reserve trying to raise their interest rates and pull a lot of their economic stimulus, well, they are trying to eliminate demand. They're trying to restrict demand so Americans don't spend as much money. That directly hurts businesses because now they aren't making as many profits, and that's how they survive. If they're not making profits, well, then they can't make products and they can't keep their current employees. So that means less money is circulating around, which is great for inflation, but not for the entire economy as a whole. Investors are now moving around a lot of their investments this week because they are anticipating inflation getting a whole lot worse on the next CPI report, which is released on Wednesday. If inflation does get a whole lot worse, well, then the Fed is probably going to have to get even more aggressive with its monetary policies, even more aggressive than their 0.75% basis point hike that they had back in June 2022. That was the most aggressive we've seen the Federal Reserve since 1994, and they could continue to do that all throughout 2022. That means until they stop doing that, well, the Federal Reserve is basically going to continue to crash the market. And the reset won't completely be over until inflation starts going down and the Federal Reserve stops raising its interest rates. And the final reason why the stock market is crashing right now is basically all tied to investor expectations. That is what the stock market is. It is a perception of what reality is going to be in the future of our economy. And this week and next week and during the entire next month of July and August, well, we have a ton of very important earnings reports coming out from Home Depot and Lowe's and a lot of your other tech giants. But the problem is Wall Street is expecting them to report very bad earnings and basically show that we truly are in a recession right now. Consumers are not buying more, and they anticipate inflation to get worse, and consumer sentiment for buying things is only going to get worse, and the housing market and other markets are also going to continue to go down. And because of that, investors are now trading out a lot of their assets as quickly as possible. And like I said, with a lot of businesses now having a hard time on their earnings reports, that could lead to a lot of jobs being lost and a lot of job listings basically disappearing in the United States. All of these businesses are now going to have to lay off thousands, if not millions of employees sometime soon because, well, they might have way too many and they just can't keep all of them right now and stay financially afloat. And it also doesn't help that you have the world's richest person, Elon Elon Musk pulling out of his deal with Twitter. That's right, he said that he is no longer planning on buying Twitter, which is going to come with a lot of repercussions. And the first and foremost is for Twitter, because now their share prices are dropping. And with them going down so fast, they have such a large market cap, meaning they are worth so much, and they hold a large portion of the money on the New York Stock Exchange. So with all of that money basically disappearing all at once, that drives all of the rest of the market essentially downward. So what does this all mean for the future of the stock market? Well, the entire thing that you need to take away from this video is that as inflation continues to go up and the Federal Reserve raises its interest rates, and we continue to have a lot of these war problems and energy problems and money problems all throughout the globe, well, the stock market here at home is going to be affected, and most likely it's going to go down. Those issues are more than serious. They could cause rippling effects throughout the entire United States and our economy, because our entire world is so globalized and we need the help of other countries, their currency and their products and resources. Well, if all of those things are in perfect unison, well, that means businesses here at home and Americans are going to be affected. As long as all of that is going on, well, then the entire stock market is going to go down, meaning we are nowhere near the bottom of the stock market just yet. The bottom meaning that is as low as it can possibly get. Like I said, it can go a lot lower. However, that does not mean that things can't turn around at some point. I don't think they're going to happen anytime soon, but China's lockdowns could end and this currency problem could end because demand gets restricted all throughout the world. Now, that could bring inflation down, and with inflation down, the Fed no longer needs to get aggressive and the reset of everything can essentially stop. And if you have the war between Russia and Ukraine, and hopefully sometime soon, well, that could not only save countless lives, but it's also going to save countless dollars. As this reset goes on, it's going to bring a lot of changes, and as those changes continue, well, the stock market is going to have to adjust, and as it adjusts, it's going to go very high up and it's going to go very low. It's just going to depend on the day, and that volatility is going to continue. But like I said though, this will not last forever, but unfortunately it looks like we're still in the beginning stages of this reset and possible recession in 2022. But now I want to hear from you on this issue. What do you think about this great stock market reset? Do you think we're nearing the end, or is this just the beginning? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.